Wall Street indices closed near the flat line. Stocks come under pressure as the 10-year yield surges to its highest level in 2024. Investors await the March inflation data. Stocks in the Asia-Pacific opened higher despite a lackluster handover from Wall Street. The GIFT Nifty is also suggesting a positive start for the Indian markets. Crude prices give up some ground. Brent crude trades around the $90 a barrel mark as Israel cuts troop presence in Gaza. But gold's record run continues above the $2,300 an ounce mark, buoyed by buying by Asian central banks, seeing the yellow metal rise for the 7th straight session. Tata Motors' FY24 retail sales rise 22%, while Jaguar Land Rover sales rise 20% year-over-year. In a couple of big likely block deals, sources say that Bain Capital could sell up to 3.34 crore shares of Axis Bank in a $431 million block deal, while Gland Pharma could also see 4.4% equity change hands in a block deal today. And the Union government considers policy support for locally made semiconductor chips, but sources say there will be no restrictions on imports of chips to meet domestic demand. That's a CNBC TV 18 exclusive. Good morning in the Mumbai newsroom. I am Hormuz Fatakia. You're watching Power Breakfast. First up, festive greetings to all our viewers celebrating Gudi Padwa. We hope the new year brings lots of joy, happiness, and of course, gains in your portfolio. But let's first up take a look at how the Asian markets have opened. And it's a positive start across the Asia Pacific despite a lackluster handover from Wall Street. The Taiwanese index is up over 1%, as is the Hang Seng. The Japanese indices were also trading with a positive bias, as were the South Korean indices. So it's green across the screen in Asia, and the GIFT Nifty, after a very good session yesterday, is implying another gap up start for our own markets. A 91-point implied open above the 22,840 mark is the GIFT Nifty. But the handover from Wall Street was a lackluster one. It was a flat session yesterday. The Dow Jones, the S&P 500 and the Nasdaq, all of them closed absolutely flat. And CNBC's Kate Rooney gets us a wrap of all the action on Wall Street.
U.S. markets are basically flat on Monday as the chance of broad gains were kept in check by a bump in Treasury yields. The Dow lost 11, the S&P 500 was down 2, and the tech-heavy Nasdaq gained 5. Tesla's highest profile trial yet kicked off today. It centers on the death of a 38-year-old Apple engineer who was using Tesla's autopilot technology when he crashed his car and died back in 2018. The driver's family argues Tesla oversold autopilot's abilities and that it didn't do enough to prevent customers from abusing that feature. Tesla argues the driver was at fault for being distracted by a video game while he was engaging autopilot. If the family prevails in this lawsuit, it could be a major financial hit to Tesla and set a precedent for nearly a dozen similar lawsuits against Tesla over autopilot. And Taiwanese semiconductor company TSMC will get $6.6 billion in direct funding from the U.S. government. The Biden administration made that announcement today. According to the non-binding agreement, the funding from the CHIPS Act will support the company's $65 billion investment in 3 fabrication plants in Phoenix. That's what's happening here in the U.S. Back to you in Mumbai.
Meanwhile, U.S. Treasury Secretary Janet Yellen is optimistic on the U.S. economy. In an exclusive conversation with CNBC, she said that inflation will come down and the Fed will consider cutting rates once inflation is in its comfort zone. Listen in.
U.S. is firing on all cylinders. I mean, in terms of short-term performance, inflation is coming down. The job market is very strong. Growth is really been a lot stronger than I would have expected at this stage. We had 3.1% growth last year. Inflation's coming down. Labor supply is up, and we're seeing some of the pressures we might worry about coming from the labor market impacting inflation. They're subsiding, but unemployment remains very low.
You're still confident we are this year?
Well, I think it will continue to come down over time. That's my expectation. And, you know, I'm hopeful that we can certainly get into the 2s. The Fed has indicated that they want to make sure that inflation's really coming down and that they're obviously considering rate cuts that would be appropriate when they reach that judgment. And we've had generally good news on inflation. You know, let's look at the data. I believe inflation will continue to come down. I think we've got a good, strong economy. We've got very strong domestic demand. Consumers are holding up. Our financial system is generally quite strong. Things can always happen. There's always recession risk. Geopolitical developments could create risk to our economy. But I think we've got a good, strong economy that's on a solid track.
And let's also listen in to some more expert comments coming in on the Fed's rate cut path from Mohammad Al Arayan of Allianz.
This Fed, unfortunately, has become excessively data dependent. And when you become excessively data dependent, you start being swung around by the data. High frequency data tends to be incredibly noisy. So if you're excessively data dependent, the image you have is of a roller coaster. The markets, the data, the high frequency data on a roller coaster. And the Fed has two choices, either to get onto the roller coaster or stay on the side and try to provide the anchor. If you take a strategic view of the economy, they should definitely cut twice. If you are overly data dependent, you're going to be taken to a place where you may end up not cutting. And that's going to be the difference. And if you don't cut, that may unnecessarily undermine U.S. economic exceptional.
Important opinions coming in there on the US economy and the trajectory ahead. But let's get to the final update in our global market wrap this morning. European equities rebounded on Monday after hitting a two-week low last Friday, with the French CAC gaining over 58 points, the German DAX rising almost 1%, while the British FTSE closed also with gains of 0.4%. The big trigger for the region was the German industrial production print for the month of February, which rose by 2.1% compared to expectations of a 0.3% rise. The region's benchmark, the German 10-year bond yield, hit a 2.5-week high ahead of the European Central Bank's decision on Thursday. The ECB is widely expected to leave rates unchanged, while investors will track any hints if there is a rate cut coming their way in June. Now, that's the global market action, but how will all of this overnight cues impact the Indian markets? We have our research team joining in with the trade setup, the stocks that are likely to be in focus as well. First up, Vivek, good morning. How is the market setup looking like? Yesterday, it was Reliance that took the indices higher, but the cues from the global markets are completely flat.
Good morning. And first up, absolutely nothing to complain about in terms of, how the Indian markets are poised. We are sitting at all-time record highs, mid-cap, small-cap indices too. In fact, if you look at the kind of trend that we're seeing, up for 11 and 12 trade sessions respectively each. Like you mentioned, the global markets absolutely flat overnight. In fact, the Dow Jones and S&P 500 marginally below the flat line, while the Nasdaq ended marginally higher. So, nothing to take out as far as the global market action was concerned in terms of equity market action. Now, coming to oil prices yesterday ended with marginal cuts. Today, they're back up, in the green territory. So, WTI hovering around the $86.50 a barrel mark, and Brent little above the $90 a barrel mark. So, that continues to remain a key parameter to track. Now, coming to the Indian markets yesterday ended at record high levels. Mid-cap index, like we mentioned, yesterday gained for the 11th straight session. So, it will be interesting to see whether that particular trend can sustain today, or we may see a bit of a pause as far as that particular rally was concerned. Remember, yesterday intraday we did see a sharp dip in the mid-cap index, causing significant volatility as far as the put option was concerned in the mid-cap index itself. So, today we'll have to watch out for any volatility in the broader end of the market. So, when you're talking about what outperformed, the auto and the realty index was something that outperformed quite significantly. And yesterday in the broader end of the market, there was some significant outperformers. So, names like Exide, Voltas, and Info, all of these stocks, saw strong price action backed by good volumes as well. What is it that markets will be watching out for today? Number one, a very large block deal in Axis Bank. It's a clean out trade from Bain Capital, and the other one, of course, is Gland Pharma. Asian markets, GIFT Nifty, both indicating a mild start for our own markets.
Thanks a lot, Vivek, for joining in. Next up is Sudarshan, who will tell us the stocks that we need to watch out for in today's session. Morning, Sudarshan. What's on your list today?
Morning, Horma. So first, I'll start with the biggest stock of the day, that is Axis Bank. Bain Capital is likely to sell up to 3.34 crore shares via block deal, and offer size $431 million, and offer price for the book is in the range of 1,071 to 1,076 per share, which is at a discount up to 0.5% to closing price of Monday. Next is Gland Pharma. Nicomac Machinery and RP Advisory Services likely to sell up to 4.4% equity, and floor price for the same is rupees 1,725 per share, which is at a discount of 7% to Monday's closing price. Next is general insurance companies, which has given quarterly updates and monthly updates. First, ICICI Lombard, March premium was up 18% and Q4 premium was up 22% year-on-year. New India Assurance, March premium was flat, but Q4 premium was up 2%. Star Health, both March premium and quarterly premium were up 18% each. Tata Motors, JLR has reported Q4 and FY24 sales. JLR Q4 wholesales were up 16% year-on-year and retail sales were up 11% year-on-year. Company says sales reflect improved production and sustained global demand. Next is NCL Industries. Cement production dispatches were up 4% year-on-year in Q4. Sula Vineyards has given quarterly updates. Net revenue was up 10% and wine tourism was up 31% year-on-year. UCO Bank has given quarterly updates. Deposits were up 5.6% year-on-year and 3.7% sequentially. Advances were up 15% year-on-year and 4.5% sequentially. Last is STL. Sources say company has launched QIP and issue size for the same is rupees 1,000 crore and equity dilution via QIP is likely at 22% and indicative price for the same is rupees 113 per share.
Plenty of stocks to watch out for as always. Thanks a lot, Sudarshan, for joining in. And lastly, Nigel is joining in with cues from the FNO space. Nigel, good morning. 20 to 600 conquered now. What's the next levels that you're watching out for this morning?
Well, it appears this market wants to hit that 23,000 odd mark, and the base seems to be shifting up from around the 22,200 to around 22,400 odd. Now, in yesterday's trade, you had the Nifty that did pretty well. But the mid-cap index was a bit of a relative underperformer. Keep in mind that there is a futures contract as well that does trade out there, which is the Nifty Mid-Cap Select. And that could be because of the expiry-related factor that we did see an underperformance to the mid-cap index. And I say that because yesterday on an intraday basis, you have Indian hotels that moved closer on 8-9% between the low and the high of the day. And that has the highest weightage on the mid-cap index. So just keep that in mind. One factor of that underperformance could be because of this move on Indian hotels and because of the expiry-related factor that played out there. Moving to what the FIs did on the index futures, well, in yesterday's trade, they added more than 10,000 long positions, and that takes their long position to around 45%. Though net, they still continue to remain net short with 55% of the positions on the short side. The encouraging part now is the 22,500 put that got written very, very aggressively in yesterday's trade. That gives you the sense that, in fact, the bulls, they believe the base has moved up. And the 22,500 call, well, there was aggressive writing earlier. Those bears, well, they packed their bag. They said, let's get out of here. It appears the momentum is against us. So that was an encouraging sign. What are the levels you're looking at? Since the 22,500 put was getting written, 22,450 becomes the first reference point. And the next one is the 20 DMA. So it's an uptrending market. Those are the two crucial factors. On the Nifty Bank, yesterday's high becomes the near-term resistance that we're talking about. And since the 48,500 puts saw a fair bit of addition, the premium is roughly around 200 rupees out there on an average. So that's why I'm saying the 48,300 mark becomes a bit of a reference point on the downside. Today, we'll have the Nifty Financial Services Index that will play out expiry. So that's another factor that you should be tracking. Let's see how we go from here. But this market wants to test the 23,000 odd mark. Back to you.
23,000 now on the Nifty. Next up, always bringing encouraging signs every morning, is Nigel. Thanks a lot for joining in. And as we slip into a short break, let's listen in to Ruchir Sharma of Rockefeller International as he speaks on India as an emerging market and his take on investing in the country.
People talking about India becoming an independent asset class. And I've just been around this block too much, maybe seen emerging markets for the last 3 decades, to know that to have very firm views on one country, positive or negative, never really works. These are waves, they come and go, these ebbs and flows, and every 5 to 10 years this changes. 5 years ago, in every company meeting in the US, the only question people would want to ask is, what's your China strategy? Now that's gone. And now they're trying to prop India up in a similar way. I'm a big fan of India, and we have always invested in India, but I would advise against concentrating any strategy too heavily in favor of one country. And there are a smattering of countries out there which I think offer opportunities.
Back with us here on Power Breakfast and on to a CNBC TV 18 exclusive. Now the Union government is considering a policy mandate for procuring domestically made chips. However, sources tell us that there will be no restrictions on imports of chips to meet domestic demand. Ashmit Kumar is here with more. Ashmit, what are your sources telling you?
Well, the government is clearly pulling out all stops for realizing the aspirations of Made in India chips. It already has a $10 billion corpus in place for supporting companies that are setting up shop here. Now it is looking to add a cherry on the cake. What is this cherry on the cake? We understand from highly placed sources within the government that the government is actively considering a policy mandate in support of locally made chips. This mandate will encourage local companies, local OEMs to incorporate, to procure, to use these locally made chips as a part of their products. That's number one. The second is the government is also actively mulling the idea, the concept of using incentive as a policy lever for incentivizing the use of these locally made chips. This is something to bear in mind. Number three, this policy mandate at no point should be construed as a restriction on import of semiconductor chips. That's an important word of caution and a caveat that highly placed sources have added to us. And finally, saying the government hopes that this policy mandate, the support mechanism, will ensure that there is augmentation of capacity. Capacities are built up to cater for exports as well.
Ashmit Kumar there with exclusive details. And from one exclusive to another, GST authorities have claimed that the alleged tax evasion in FY24 nearly doubled to over 2 lakh crore rupees. Sources tell CNBC TV 18 that the online gaming and casino industry, which is fighting the tax authorities in court, account for over 40% of that allegedly evaded amount. Timsy Jaipuria is standing by with the details. Timsy.
Well, that's right. Sources have told CNBC TV 18 that the DGGI, that is the premier agency to detect GST evasion, has detected about 6,074 cases involving over 2 lakh crore rupees of GST evasion in FY24, which is a 99% increase as compared to FY23, where 4,872 cases involving a duty evasion of over 1 lakh crore rupees was detected. On the terms of voluntary payments, in FY24, 26,598 crore rupees was a voluntary payment made by taxpayers as compared to 20,713 crore rupees in FY23, which is a 28.4% increase. DGGI has also arrested 147 masterminds in FY24 as compared to 92 in FY23. And when it comes to the sectoral analysis, online gaming and casino industry evaded the maximum GST, which was about 83,588 crore rupees, followed by co-insurance and reinsurance sector, where evasion of 16,305 crore rupees was detected, followed by secondment, that is import of manpower services, where evasion of 1,064 crore rupees was detected. Some of the other sectors where investigations with high evasion revealed that the other sectors are banking, financial services, insurance, pharmaceuticals, e-commerce operators. So let's see what is the future course of action for DGGI in FY25. Back to you.
Timsy Jaipuria there with all the details. But moving on now, non-communicable diseases are rising in India and cancer is the leading concern, says Apollo's Health of the Nation report. The report draws inferences and insights from data based on the people engaged through the Apollo hospital systems and the medical ecosystem at large. The report also highlights that there has been a rise in mental health disorders. Ekta Batra is now joining in with the key highlights from the report. Ekta.
The burden of non-communicable diseases is rising in India, and it seems as though cancer is leading. The number of cancer cases in India is expected to increase significantly, reaching approximately 15.7 lakh cases by 2025, up from 13.9 lakh cases in 2020. Breast, cervical and ovarian cancers are the most prevalent amongst women in that order, while lung, mouth and prostate cancer are most common amongst men. Disturbingly, cancer diagnosis occurs at a younger age in India compared to other nations. For example, the median age for an Indian to get breast cancer is 52 years, while it is 63 in the US. And the median age for diagnosis of lung cancer is 59 in India, whereas it is 70 in the US and 75 in the UK. Colon cancer, once associated predominantly with older individuals, is now increasingly affecting younger people, with 30% of colon cancer cases at Apollo hospitals below the age of 50. One of the key reasons for drawbacks in India's fight against cancer is our poor screening rates, which is much lower compared to global standards, highlighting the urgent need for proactive measures in preventive healthcare. For example, in India, breast cancer screening is 1.9% versus 70% in China and 0.9% in India for cervical cancer versus 75% in China. Compounding these issues are disparities in healthcare guidelines, such as the PSA threshold for prostate cancer screening, which, according to experts, needs to be tailored specifically for the Indian demographic. Furthermore, the report underscores a rising mental health disorder, with a sharp increase of mental health conditions of those between 18 to 40 years. Depression is emerging as a significant concern amongst the younger population, with 1 in 5 people depressed within the age group of 18 to 25. Other key takeaways include chronic stress, especially seen amongst young adults and seniors, is adding to the increased incidences of hypertension and diabetes, with women being particularly vulnerable. Obesity, which is a risk for NCDs, has risen, with majority living with unhealthy waist-to-hip ratios and belly fat. The report also indicates that high blood pressure and pre-diabetes are becoming increasingly common, particularly amongst the younger demographic. Today, 66 out of 100 people are pre-hypertensive and 1 in 3 people have pre-diabetes. However, amidst these concerning statistics, the report emphasizes the importance of early screening and proper monitoring. Early detection of conditions such as breast cancer significantly improves survival rates, while regular health monitoring leads to tangible improvements in blood glucose, blood pressure, and body weight management.
Some serious concerns raised there in that report. Thanks a lot, Ekta, for bringing in all the highlights. But let's slip into a short break now. Up next, we get your cues from the commodities market. Stay tuned. We'll be right back. Back with us here on Power Breakfast. Now let's get you the latest updates on the West Asia conflict. Negotiation talks in Cairo continue to remain at an impasse as both Israel and Hamas failed to reach a common ground yesterday. An Egyptian media report had highlighted that the truce talks are making progress in Cairo. However, a senior Hamas official has denied the claim and said that they have not seen any progress in the talks. Hamas has also rejected an Israeli ceasefire proposal made in the talks. Israeli Prime Minister Benjamin Netanyahu said that the date has been set for a ground offensive in Rafah, where about 1.4 million Palestinians are sheltering currently. He added that Israel is working towards achieving a complete victory over Hamas to release all the hostages. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Oil prices seem to be slightly cooling off, but gold, no stopping that one.
Oh, well, yes, I'll start with crude oil prices. And as you were mentioning, it's quite a mix of statements coming in from between Israel and Hamas. But Hamas rejecting the latest ceasefire proposal from Israel definitely seems to be getting the prices back up again. You know, also interestingly, there was an ANZ report and which says that India fuel demand, especially jet fuel, has hit a record high in FY24. And that in turn also supported the sentiments. We anyways have been reacting positively to the strong manufacturing activity from China, Germany, Europe. So when you look at the overall global manufacturing numbers, that really seem to be improving, and that is supportive for industrial commodities, not just crude, but for copper as well, which is trading at a 14-month highs. And as you mentioned, gold is hitting all-time highs yet again, and this time at around $2,340 an ounce. We have silver prices, which are trading at a 3-year highs. The markets also are looking at across board, whether it's aluminum or zinc for that matter, also trading at a multi-month highs right now. The whole focus clearly is going to be the inflation data from US and China that comes in this week. Then you also have the FOMC minutes this week that would tell you on the Fed monetary policy outlook. So it promises to get the rest of it also.
Thanks a lot, Manisha, for joining in and sharing with us all the cues there from the commodity space. But with that, it's a wrap on this edition of Power Breakfast. Bazaar Morning Call comes up next to set you up for today's trading session. From myself and the team that put this show together, thank you so much for watching.